Hi guys, welcome back to my channel. Today we're going to talk about bonds and mortgage rates. Bonds and mortgage rates in Canada are interconnected, and changes in the bond market can influence the direction of mortgage rates. Here's how bonds affect mortgage rates in Canada. Bond yields and interest rates. When you purchase a bond, you are essentially lending money to the issuer, usually a government or a corporation, in exchange for regular interest payments and the return of your capital or principal when the bond matures. The yield on a bond is the return an investor can expect to earn on that bond based on its current price and coupon rate. When bond yields rise, it means the bond's price is falling, and when bond yields fall, bond prices rise. Mortgage rates tend to move in correlation with government bond yields. Government bonds, such as the Canada's Government of Canada bonds, GOC, are considered low-risk investments. Lenders often use the yield on government bonds as a benchmark to set their own interest rates. Interest rate expectations. Bond markets are sensitive to interest rate expectations. When bond investors anticipate that interest rates will rise in the future, they may demand higher yields on newly issued bonds. As bond yields increase, they can put upward pressure on mortgage rates. Lender funding costs. Banks and other mortgage lenders often use funds from the bond market to finance the mortgage loans they extend to borrowers. When bond yields rise, it becomes more expensive for these lenders to obtain funds in the bond market, which can translate into higher mortgage rates for borrowers. So as you can see in the background, when bond yields go up or down and there is pressure put on the bond markets, this can make changes to interest rates that we don't really see as a consumer. We just assume that the banks are raising the rates one way or the other because the Bank of Canada is raising the rate one way or the other. But fundamentally, there is a lot more going on in the background, and the bond markets are what dictate what happens with rates going up or down and the amounts that they go up and down. Competition for capital. The bond market competes with other investments for capital from investors. When bond yields rise, they may attract more investment capital as investors seek higher returns, potentially diverting capital away from other investments, including mortgages. This competition can impact the supply and demand for mortgage lending, influencing mortgage rates. Market sentiment and economic conditions. Bond markets are influenced by investor sentiment and economic conditions. For example, during periods of economic uncertainty or financial market volatility, investors may seek the safety of bonds, causing bond prices to rise and yields to fall. This can lead to lower mortgage rates as bond yields decrease. Fixed versus variable rate mortgages. Canadian borrowers can choose between fixed rate and variable rate mortgages. Fixed rate mortgages are more directly tied to bond yields because they are typically funded by longer term bonds. Variable rate mortgages, on the other hand, are influenced more by the central bank's policy rate. Example, the Bank of Canada's overnight rate, which affects the lender's cost of funds. In summary, changes in bond yields, particularly those of government bonds, can have a direct impact on the interest rate offered on mortgages in Canada. When bond yields rise, it can lead to higher mortgage rates, and when bond yields fall, it can result in lower mortgage rates, assuming other factors remain constant. Borrowers often monitor bond market trends to make informed decisions about when to lock in their mortgage rates. Now, I find this statement a little bit interesting because I believe that the bulk of Canadians really have no idea how this all works in the background. I know I didn't until I started doing a little research this week to see what the mechanics were in the background. But I'm hoping that some of my viewers will find this interesting and maybe give a little more of an explanation of what goes on in their mortgage rate world. Thank you for watching. I very much appreciate it. Please hit that subscribe button if you're already not a subscriber to my channel. Hit the like button and the notification button, and we'll see you on the next video. Thank you very much.